Well, Peter, it's another week in lockdown here in Sydney. We're rolling into our third week of an increasing lockdown, and we're operating in a COVID environment. It's not slowing down the trading world. In fact, it's probably exacerbating and actually stimulating many to take a good look at the research that's pumped out by the good people at XM. Pete, as we get into today's conversation, would you like to just give us a few moments on the wrap? What happened? Where are we at? How did last week finish? And as we start this week, it's Tuesday. What are we seeing as the week starts to unfold?
Well, good morning, Will. Yes, it certainly was. It was a nice finish off as far as Friday evening, Saturday morning here in Sydney with the US equities. Very, very strong move to the upside. And that was mirrored as in Monday's trading. And what I'm just getting up here on my screen, we had a very nice move to the upside last night, or Monday's trade, as far as the Dow, the S&P 500 and the NASDAQ. They were in positive. The Dow Jones just shy of 35,000, Will. Who could have imagined it? 34,996. It was up 0.36. Got the S&P 500 approaching that magic 4,400 number at 43.84. And the NASDAQ approaching the magic 15,000 number at 14,733. So solid moves. Yesterday was washy. We had a very strong move in Nikkei, the Japanese equity market. They had a very solid move to the upside yesterday in Asia trade. I'm just looking where it was. The Nikkei was up about 0.7. But some of the other markets, they gave off a little bit of those gains. That'd be probably this morning's trade, actually. So yeah, very, very solid. And we're in okay territory. The Aussie's up around about 0.6% this morning. So overall, Will, positiveness running across the equity markets.
Markets, politics, economics, more markets. That's the stories of the week as they unfold across the headlines of all the major mastheads. Oil looks like it's hedging higher as investors assess uncertain demand outlooks. It looks like the New Zealand rate hike is a topic for some conversation that we can have in a few moments. The BOJ looks like they're expected to offer some interest on green loans, which is interesting. And certainly the Bloomberg opinion poll is running hot. And the most interesting story that I call out this morning is a hot Indian food IPO during a tech Cold War. I'd love to dig into that a bit later. So, Pete, but let's dive into the slides that matter here on XM. It's what does the central bank divergence mean for FX? That's a series of stories that I'm sure are very topical right now and certainly bouncing around a few boardrooms.
Absolutely, Will. So really what the divergence is that you've got economies that are coming out of this wind back as far as stimulus far quicker than other economies. And that's going to be demonstrated over the next, I'd say, 4 to 5 months, with the first cab off the rank being the New Zealand economy with a rate rise. It's tipped to be, or analysts are forecasting, Will, that it'll be in November of this year. So there's the storyline there. Now we get to the next part as far as what impact it has as far as the economy and to currency. And there we're saying that maybe those day traders, the carry trade, you're borrowing in your own currency. So you could be a Japanese yen trader, or you could be living in Japan or anywhere else in the world, and you've got your own currency and you're hedging or speculating on the rise of another currency against it from a cross rate perspective or against another currency. So that's called carry trade. And we're going to see that, I think, demonstrated in the next matter of months. It's really starting to warm up. So keep a very close eye on that, where you borrow in a cheaper currency and you've got that movement. I'll just read it out. Investors can borrow in a low yielding currency and then invest that money in a higher yielding asset abroad, earning a return on the difference and boosting demand for a high yielding currency. And that traditionally, or that is known as a carry trade. There we are.
All right. So we're talking exiting cheap money, ultimately raising interest rates. And the question is really, which currency will we be trading? Will it be the dollar, the pound, the Kiwi, the loonie, the yen, the franc, the euro? Suggestion is that the euro is sort of lagging a little, but yeah. Is there a view there, Pete?
Well, I think what's going to happen, Will, is that you will see those economies that do start to ratchet interest rates up, which will impact their currency considerably. And Aussie, they're saying that could be a 2024 till we get an actual rate rise here. So the jury's out in that regard, what our central bankers are prepared to do in Australia. But if you have got a currency, say the Kiwi, it'll ratchet up quickly because people will start to buy that currency as a higher yielding currency. and they're getting a free run. So there's the storyline there, which greatly impacts the value of the currency, can cause major concerns to their own central bankers. And this is where the unwinding of stimulus is really textbook study time for any wannabe economists, or naturally, if you are a currency trader.
Pete, let's look at very quickly, a couple of quick slides. Let's talk about major economies. Are they recovering? Which ones? What is where does Japan sit? We talk a lot about Japan. It looks like it's struggling a little more than perhaps the US and the UK, but chart on the screen talks about major economies, and the question really is, are they recovering?
Well, I'll just touch on Japan, Will, and I spoke to a very dear friend, an older gentleman in Tokyo yesterday. Fourth lockdown. Olympic Games now are starting in the next couple of weeks, and no spectators. Remembering what they've spent there, it's been an ongoing, 8 or 9 year saga. I remember them when they actually they were awarded the games, and what they spent internally, the tunes of billions of dollars to get stadiums ready, technology and everything interfacing into the games. And now you've got, the people go there and the athletes, and there's no spectators. You just can't believe it. So there's the story there, and in turn, what impact it's going to have to their whole economy, where you could have had, I would have thought you'd have, hundreds of thousands of people swarming all over Tokyo over that summer period to enjoy the traditional Olympic Games, Paralympics, and the general feel good. Japan is quite an incredible country to visit, Will. I've been there a number of times, and that is all taken out. It's stripped out to their economy. So, that's going to naturally have an impact to the economic recovery from every component of their economy.
And we talk about that. So we're talking about again the Olympic Games, which obviously the investment that's gone in there locally is significant. It's the on again, off again games. There's the conversations around whether it should have been postponed or not. It's now the games that may or may not have spectators, and one hopes that that there is something that can be done in Japan to resolve some of those economic issues, and certainly sort out some of the supply chain around vaccination. It seems to me that it is a significant risk that they have, and they need to sort of get on top of that pretty quickly. Mate, as we dive into the conversation really around the Delta variant, the Fed here on this screen is now talking a little bit about its rate pricing, potentially expecting 3 hikes by 2023.
Yeah, that could be well the case. We're saying that, do you get blast off sometime early 22 or the second quarter of 22, then sometime into the third quarter, and then what happens around that Christmas period? So again, it's only speculation at the moment. No one's sure of the future, and we've got a lot of moving parts to play through in the next year, Will, till we really get a clear indication. We've got the taper wind back. We've got what happens as far as economic recovery, inflation to manage. There's the other side. I mean, like it or not, if you're just if I only look at one form of inflation, and that would be crude oil prices, and if you're looking at America, they were paying $1.90 a gallon for fuel, I believe, about this time last year. I'd have to check, but I think that's about the case. They're up around about $3.60 a gallon, approaching $4 a gallon. So what impact that has naturally to the consumer, the wallet and the purse buying power. You strip out an extra $40 or $50 or $70 a week as far as fuel costs, or $100 a week out of your pay packet for the same item, then everything else goes up as well, because it's all got to be transported. So you know that as well as I do. You run a family, you understand what things cost. If there's no extra coming in, that is inflation. And how do you manage that? How do you get through it? So they're major impacts, I think, that are going to play out.
Well, you're talking about QE, you're talking about tapering, we're talking about signals. On the screen now, we've got a chart here that shows the divergence between the ECB and the Fed. And I think if history is anything to go by, the last time the two moved in opposite directions, the the euro dollar fell apart. Now, what does that mean?
Well, what's going to happen, I think that you'll see if first off, if you see a rate rise that does materialize, as you mentioned, 3 in say 22, or by the time of early 23 in the States, and if you don't have any in the ECB, the European Central Bank doesn't have one, then naturally you wouldn't have to be that smart to figure out that you would think that the US dollar would appreciate against the euro. So there's the first part of it. So that would mean that more traders would start to buy dollars. So how far does the US dollar appreciate? Does it go up 1%, 2%? Does it go up 5%? Does it go up 10%? And that's the uncompetitiveness that really drives, again, you've got more, it's a more expensive currency from an export model. So these are all impacts that can greatly handbrake any economy exporting your way out.
It's an interesting conversation. So the handbrakes we're looking for are really geared into the prior conversations. It's all the materials that we use. It's all it's the components and elements of our everyday life, Pete. And again, I suppose, you know, the big signal here is that if this starts to shift, as you're suggesting, you know, is probably anything to do with the home.
Well, absolutely. You run a home, you've got children. I understand how much things cost. So energy prices increase, all foods increase because they've got to be transported. A country like Australia, like the US, from, you know, the farmlands, it's got to actually land from a supply chain perspective. It's got to be transported across the nation. Trucks, cars, whatever else, everything just becomes more expensive. And there's the issue that again impacts the competitiveness of that nation, and we're very conscious as far as what a huge component the export side of the US economy is. It's a service, but also manufacturing, and they export those finished products to other parts of the world. So they get paid in US dollars. It's more expensive. Is it competitive? It really creates a major issue to try and forecast how all that plays out.
Mate, should we be worried about the bond market?
I think you've got to be worried about it in the sense of what happens with the 10-year and what happens with the shorter end, you know, the short 2-year. It's just a component of any economic model is what the interest rate forecast is going to be. And again, where do traders position themselves on that curve, or, you know, a year out, 2 years? And that's where the carry trade. Do they now look at, right, I'll buy something now on the expectation that something's going to rise as far as an interest rate, and what impact is that going to have on the currency that I'm holding? So whilst you can trade physical currency, you can also trade it with leverage on a platform. And it just comes down to what your risk appetite is. And again, what you want to outthink a market. There's a lot of, you know, it's a fascinating, when you sink your teeth into it, Will, I find it very fascinating. And I believe that, you know, you've got millions and millions of traders around the world that find it fascinating. Because it's
certainly a pastime that many have taken up. And I mean, I think I was talking to some people, and they would say to you that there are more trading accounts open today than any other time in history. And if we look at the time in which you know, they actually were opened, it was immediately after the first lockdowns. And so people have rushed into the game of markets, the game of trading, Pete. And I can only say that they really should be looking at certainly the education materials that are provided by people like XM, and certainly doing the best to educate themselves as to the basics, the bottom line, and the signals that drive markets. But as we jump through to the next slide, Pete, we won't dwell on this. Reserve Bank of New Zealand, they're betting for a November 2021 rate hike. That bet looks like it's being backed by some tailwinds. Thoughts?
Yeah, exactly. I mean, they by the looks of it, Will, they'll be the first cab off the rank. So as we mentioned earlier, if that does materialise, it'd be interesting to know what their true inflation number is in New Zealand, and how far their costs as far as petrol, real estate. I know that they've had a very, very strong residential real estate appreciation over the last couple of years has been very, very strong. So all of those factors would be fascinating to pull apart and really examine all of that data, Will.
Pete, moving forward, this is one that's interesting. And look, China's an interesting story for everybody. And you know, the China hawks. You've got the pro-China, the guys that are a little concerned and a little wary. Those that have been there, those that haven't. But it's a you know, if we think about the country as a whole, there's thousands of years of history. There's thousands of years of innovation. The world's benefited over the years. The push and the pull in the early 1900s. You know, the skirmishes over the river. Shanghai, and you know, again, it's all over trade and power, trade, power, and product pricing. You know, we're talking markets. So where do we sit today? I think there seems to be an imbalance in this chart. It seems to have been tracking relatively nicely. Clearly came off the cliff like everybody else in the world in 2020. As we came out of that, they rocketed. But perhaps we're seeing the stabilisation there, or the fall back to what normal could be in the future. What's your thought there, mate?
Well, you know as well as I do, for the Chinese economy to boom, it needs consumption from the West, and there's the first part. So all of those, that just needs to continue, or do they? And naturally, we understand, you know, the Chinese economy is now far more mature than what it was 10 or 15 or 20 years ago. So domestic consumption is increasing. The true carnage that they've experienced with COVID seems to, no one knows what the numbers are. So they only see GDP, and they only see, you know, how their economy is performing and their equity markets. So from a trading side, it's not that clean cut. And many traders say that it's difficult to examine the true data. So there's that first part of it. The second part is, does China continue to grow this decade like it did in the previous decades, coming out of a COVID pandemic? And does it grow quicker than the West? They're all issues that need to be examined, considered, and only time in a lot of ways will tell.
And time will tell. Okay, bank account, balance sheet, total assets. Look, let's not spend too much time on that. It looks like they've got plenty in the bank. The chart suggests that the holdings are falling a little bit, but I think we'll find they recover pretty quickly.
Well, yeah, and you know, that's as far as total assets and what it's been very, very heavily engaged from a stimulus standpoint, and like a lot of economies, they needed to, you know, stimulate. Now it's a time that you're starting to pull some of that off the table, Will.
COVID cases in Japan. We spoke a bit about this in relation to the Tokyo Olympic Games.
Yes.
The cases are still pretty high there. Infections may be rising again. Probably not much more to add to that conversation, but this chart suggests that you know, they did a great job in from the early days in Jan 21, really getting it under control.
Yes.
It's clearly had some environmental change. It's peaked again, and again, to be fair, looking at this chart, it looks like they're back into we're getting this under control program.
Yeah, well, that's true. And they've just started their fourth lockdown. So how that's going to work economically, what impact it has, and again, you know, to the Tokyo Games, only time will tell. But they've got, as we very much appreciate, from a aged economy, you know, an aged population, they are far older from a mean percentage or a mean age than a lot of other economies in the world. So you've only got to walk down the streets of Tokyo to see that and to really appreciate it. People over 60, 70 and 80 years of age, there's a lot of them, millions of them.
All right, mate, let's talk retail. I want to spend a couple of minutes talking about retail because it's exciting for everybody. Everybody likes to buy things. There's plenty of buy now, pay later options for people that are, you know, signing up for those things. In the end, I think, you know, whether you're in that category or you're not, retail's this is something that we all, none of us ever can walk past. one of the interesting conversations that I heard this week, canvass quietly, was Rob Scott, chairman of Woolworths, or is he CEO of Woolworths? One of the executives there, volunteering, car parks and space, to turn them into local vaccination centres. And I think, wow, take a leaf out of the United States books. And if you're going to mobilise. You're going to use resources, use them. But, I think retail is something that's certainly a good conversation to be having. A lot of people probably doing a lot more online now.
Absolutely. And, all of these impacts need to be considered as far as performance of companies and dividends, and what do we see from a shareholder's perspective as from 20 and then certainly into 21. Are the dividends there? Is the performance of the company there from a sales perspective? I mean, it's not very, very hard. I don't profess to be that smart at business, but I know one thing, and that is, from all the studies I've done, you need revenue. So it doesn't matter what business you're in, eventually it does come down to the CFO says, or someone involved in the counting of the dollars at the end of the day, what's in the till, how much did we sell? And if you know that pretty quickly, and that's the economic health of your enterprise. So that's what's going to happen, I think, over 21. If we continue to be in a lockdown in New South Wales and certainly Sydney, how long does that drive home for? I mean, if it's here for 1 month or 2 months or 3 months, then it's got to have some form of economic carnage to our local businesses.
And you raise a good point. What do we sell? And what can we team? How does business survive? How do people partner? How do you, drive through a time of change and come out of the other side successfully? I mean, these are big questions that are being asked, and I see reports written that digital tools will save the world. Well, they won't. I see reports written that that really that profess to really espouse the better use of data to achieve a better outcome for a customer. Should we just phone the customer up and ask them what they want, Pete?
It's very true. I mean, I've been listening to what you've been saying then, and I'm racking across my mind. I grew up in a pub. So my family had a pub in Sydney. So if you say, well, it's a data-driven economy or whatever, well, what was your beer like? And what was the customer's experience versus it was at Botany? And there were five pubs in the suburb. Then you had a golf club, you had a couple of, a registered club being an RSL. So they're all vying for that one consumer. Well, your product offering has to be better than everyone else's. And that's and what you just said then, well, you've got to ask the customer, what do they want? And behaviors change. So, I don't think it's an easy task. And those grassroots, the warm smile, the firm handshake, the hello, how are you, says a lot about how you survive in business. And you've got to have that top-down philosophy embedded across your enterprise, because your first line of defense are your staff that are talking to your customers. It's not the boardroom. The board's got nothing to do with it. The board are pulling levers and going, oh, hang on, we need more resources to go into marketing. Oh, hang on, we've got to pull some of that back from compliance. Oh, hang on, we're going to give more money to expansion, or we've got to contract, or we've got to, close a couple of stores. That's the board making those decisions. The process has got to come down to, did we welcome the customer? Did we say good morning? How are you? All of those simple rules to life. That's what you say, and you just summarized it. Did you ask the customer what they wanted?
Now, Pete, having asked the customer what they wanted and made some assumptions about what they need, what is it that a business owner needs to hear in a time of panic? Because remember, nobody's doing super well unless you're, and actually that's not true. There are plenty of companies that will be doing super well and are geared to do well through the cycle. But for those that aren't, Yeah, and we come back to this cycle of M&A that we see appearing. There's a lot of trade going on. There are a lot of organisations, consolidating. There are significant opportunities around, building better businesses through tougher cycles, because they force us to make decisions that perhaps we wouldn't make otherwise. And if we look at last year's activities, well, what we saw there was that, we might have rejected digital and remote working for 20 years in most organisations. Some embraced it. But what we saw within a 6-month period was the adoption of significant technologies, the application of those into organisations, and theoretically they're, a year later, what we're seeing is either productivity or non-productivity outcomes. But I would say to you that, it's times of change that force the rethink. And having been forced into a rethink, what do you think the business of the future looks like?
Well, what industry? Here comes the next part. If you look at strategy, you say, well, are we going to pay, if we go and merge with that particular company, what do they bring to the table? And is that purchase going to be value? And if it is going to be value, what I pay on the 13th of July 2021, if I postpone that for 6 months, could it be cheaper? Because if their performance over the next 6 months doesn't hit their forecast, then it can't be more expensive, because it comes down to the consumption, or again, how much is in the till of that business? Is it a technology? What industry are you in? And what is your ultimate strategy? Is it to roll your business up and buy this, buy that, and amalgamate, and then all of a sudden give yourself the opportunity to be poached, or a larger animal out there bites you and takes you away? I mean, there are many ways to discuss or look at strategy. Strategy is in the eye of the beholder, because
let me ask you a question.
Well, everything is war, Will. Everything is war.
Well, there's a great book there written on the, and I presume you're referencing The Art of War. But Pete, if we think about strategy for a moment, and we think about the application or the makeup of a business that we think can survive through the cycle, what are the critical ingredients?
Well, if you're a gaming machine venue. And remember, I use that, why I suggest that is because we're the second largest market in the world after Nevada, being New South Wales. And there's 100,000 machines in the state. And they're all currently closed at the moment. So what happens to that end of market? Because that is the hospitality sector. And in turn, those venues are shut, but they also have food, liquor, entertainment, aged care, health. They have all of these other components of their business model that rely on that one part of revenue. So if I only look at it, and it employs many tens of thousands of New South Wales, of the New South Wales population, Will. So if I strip that out, I say, well, hang on, where does that industry go? What happens to that if this is a 3-month lockdown? What happens to future growth? Depends very much upon the industry that you identify. If you're in the healthcare sector, then you would have to, I would think that you would be rushed off your feet. It would be booming, absolutely booming. So it all depends on where you're positioned, and a little bit like it's an unknown. Because you haven't lived through a pandemic before, and either have I. And these businesses are all new and highly agile. And who could have imagined Graham Turner from Flight Centre? What do you think would have, 2 years ago, he was probably, like absolutely on fire, booming. And all of a sudden this comes out at the end of 19 or the start of 20, and have a look at their share price, have a look at Webjet, have a look at all of these different components of business, Will, that have been hemorrhaged. That's a very hard question to analyse, answer, and you can't come up with the right answer.
No, you can't. And the answer is you can only inform yourself and continue to identify good information and critical sources.
Well, just stay there for a second. Just have a look at Flight Centre if you can. Go back. That's August last year, just so everyone knows.
So that's the 1 year chart. I'll go to the
go 5 year. There you are. So that was a $63 stock. So that was in 2018.
Yeah, so if we look here, 2018, it peaked here on the 17th of August 2018, $61.55.
Okay, well, that's 35 months ago. 35 months ago, that if you, I'm now the CEO of that business. They bought me and I'm the CEO, you're the chief financial officer. We came in a week before that. I would have thought, well, Will, we're going to build this business. We're going to drive this business. It's just an example. And you would say, oh, hang on a sec, Pete, you wouldn't believe that our stock price on the 20th of March, 2020, in around about 17 months time, it's going to be worth 12% of what it is today. It's going to be worth at its bottom $8.91 or $8.92, Pete. And I'd say, Will, we've just hired you as the chief financial officer, or you're in charge, or you're the chairman of the board. Well, I think you really need to leave the industry. You better go and maybe have a very stiff drink and identify what reality is.
Pete, but to be fair to those guys, if we look at it, right, they really came down. They came down 17th of August 2018. Something clearly occurred between the August and November that year. So we'd have to go back and obviously look at the records. But you can see here that, it's only 1 or 2 months and they've dropped $20 in share price.
I would agree. So what happened was obviously, when we say that from a perspective, Will, it was exhausted to the upside. What happens is companies outgrow themselves. They give you all of that, and it's all about energy and traders trading it as well, that are buying and buying and buying. And then there could have been, obviously something happened. I don't know the company intimately to even examine it, but it fell off a cliff there. If you just wind that back, have a look at that fall just after the peak, Will, that really came down dramatic. There it is. Go to the left a little bit where it comes off that cliff. Go a bit further, there. Yeah. Look at that. I mean, that really is like bang within a week or so.
$10 hit, right? But even Joe, just go back. We're talking 3, 4, 5, 6 months, right? So it's tracking here $40. It races up to $60 thereabouts over a short period of time. It drops significantly very quickly after that. And then it trades in that horizontal band there for a little while. And then
COVID hits.
And then COVID hits, clearly.
And then boom.
And we're tracking down here now at, what now is the new normal for those guys at the moment. I've just gone out to the 10-year chart, Pete. And so you can kind of see that for the, it's traded, in that kind of $30 to $40 range, 2013.
Yep.
Basically 2018. So that was clearly its natural market position. So look, a great stock to look at, and certainly one that was clearly impacted by COVID. But look, still there, still standing, and still tracking at around $8 with a well, let's have a look. With a market valuation of let's see, where are we? Plenty of shares on issue.
Market capitalization, $3 billion.
Yeah, there you go. So clearly it was trading a lot higher than that, and I guess the time.
Well, that's the point. That market capitalization is the number of shares on offer against the last price. So if it's $15 and that peaked at, we just demonstrated that, Will, it was $62, I believe. If you multiply the last price of $15.67 by 4, that means its current value it's lost 75% from its all-time high. Now, that means that market capitalization, people go, well, hang on, Pete, my share price has gone from $60 to 15. I bought at the peak, but the but the market capitalization has stripped out. Not it was worth 12 billion, $13 billion. Now it's worth 3 billion. So that really is a demonstration of asset annihilation. I'm not, I'm not seeing. It's just this is all, an example of what the circumstances that we're playing with at the moment.
Experience markets and also cycles, and what we've seen here is clearly one of the things that people need to be aware of is that markets aren't perfect. Markets price to market price, and they price on a set of conditions environmentally. And here we are today, and as you demonstrated, you've seen the rise and rise, you've seen a fall, you've seen a stabilization, and hopefully at some point we'll see a recovery.
Yep, and it demonstrates also, I think more than anything, Will, is that traders, you can make a hell of a lot of money on a market correcting or a market falling, and that really allows traders to participate both sides of the market.
Well, Pete, there's a good lesson there for a lot of people. We might break this one up into a few short segments, but wrap me up. We've seen what's happening. We've seen what's gone before. We know what's coming. Two signals that you're looking at for the rest of the week.
I want to see what happens as far as the continuation with oil, Will, because it was sold down heavily over the last 3 or 4 trading sessions. It really got hit hard, and now it seems to be rebounding. So there's the first part from an oil trade. I'm still curious to see, we gave an overview as far as equities, and they just seem to edge higher and higher each day, or certainly each week or each month, US equities. And where does the US dollar trade? I'm conscious of that. Does it still stay range bound in that 92 to 92.5 US dollar index? And where does gold trade? Gold gave off $150. It was just spanked down, and it seems to be on its way back up again. So keep an eye on that if you're a trader. Plenty of other markets to look at. Look at all your currencies. Who could have imagined the Aussie dollar under 75 cents? It was only a little while ago, and we were saying together, Will, it's going to be 81 short. That's only months ago. So yeah, a lot to look at and a lot to observe, and that's the exciting markets that we live in and participate in, Will.
Well, there's the wrap. And Pete, thanks for your insight. Thanks for your commentary. And certainly anybody listening, go back and find some more information there at XM. Trade it when you're ready, and reach out to Pete if you need some more information.
God bless. Thank you, Will. And to everyone, enjoy the circumstances that we're living in. Get healthy. And that's the most important thing. Rest and eat well. Take care.